Okay, I went ahead and started live streaming. We're getting smaller and smaller. As far as attendance goes, maybe some folks are live streaming. Hey, lately, here, Cody, Clay, he's usually here. Monique is here. The Cox is here. Georgia will be here in a minute. Very French, not here. Clayton, is that his background? Clayton's not here. Regina, Brianna Hall, Regina Hightower, Adam Mason is in another place. Samuel, Mark, Anna, is that Anna? Maya, Haley, Zachary. Zach, wherever you are, if you hear this broadcast today, never did get back with me about taking your test, so please do so. Anna, not here. Anna's here. Okay. All right. Stevens. Okay. Antonio, not here today. You're Anna, right? Anna, Brianna. Okay. Brianna, I was, that's what we have. We need to finish chapter 4. For Tuesday, you need to read chapter 5 and whatever else comes along with it. Now, chapter 4, I've asked you to work on Excel. Did I give you a due date for that Excel problem? Today? How many of you have that Excel problem today? Well, then the day must be the due date. Okay? That many of you have it. All right, so I'll take that Excel problem today. That's bonus. And if you're out there live streaming, if you want to turn this Excel problem in, you'll have to turn it in today. Was there one Excel problem or two Excel problems? One. All right. Just glance at that real quick. Is the whole production summary, which we want to practice today. You got part 1 here, which is all your information. We can break this down into probably 4 parts. Now, some of my items won't let me draw. Is there an edit up here anywhere? Do y'all see an edit?
Design.
Huh?
Design, I believe.
Did you say it was on?
Design or leaders?
Oh, under design? Okay, design. No, that's just the changing the appearance of it. Yeah.
I'll draw next to it.
I know, I've tried draw. Says auto on, but even if I select a pen, I can look maybe under tools, see what tools does. That don't work. Pens, it won't let me select a pen. So that's crazy. On the PowerPoint, it lets me look at that easy. But anyway, this is part 1. Information has to be given. Weighted average method of calculating units transferred out, 4,800. And equivalent units in engine inventory, 160. Now, where does this 4,800 come from? All right. Units in process 200, which we don't worry about. Units started into productions. All right, 5,000. Now, units in ending inventory, 400. So what is 200 plus 500? 5,000. What's 5,000 plus 200? All right, subtract ending inventory, leaves you how much? 48, transferred out. All right. Now materials, just ending inventory, 400, 40% complete. 40% of 400 is 160. 25% of 400 is 100. So you got to get your equivalent units. That's the number one thing you've got to get. All right, on a production summary, and you'll have one of these complete problems on your next test. Okay, so equivalent units we work with weighted average and FIFO. Now we got to get unit cost. That's part two. Or part three, if you count the information, 1, 2, 3, and 4. All right, 90, 49, 60 into 378.2. Well, now where does 378.2 come from? Beginning materials, new materials cost. 76.25, 72.75. All right, you've got unit cost, take your equivalent units, ending inventory, times that cost. So here's the money you have in your ending inventory, 19,475. Now, units transferred to the next department, 4,800, you can add these two together, you get 715.2. All right, 715.2 plus the 19,475 is 734,675. All right, add these two together here. You add these two together, that should give you 734,675, or cost of beginning work in process, and then cost added. Okay, so there's at least 4 parts to that production summary. And that was a homework problem for the day also. So that was Excel. Did you get those equivalent units right on Excel? Okay. Now, you didn't really have to do this part. What's the difference?
Just formula.
The what? Just the formulas? I guess if you change units, definitely would change your worksheet. I'm only worried about that first part. If you made all these changes. All right. For journal entry problem practice, try this foundation problem 15 before Tuesday. Just some journal entries, put them on plain journal paper. And try to follow the instructions. It will be a complete review again, okay? All right, so what problem was due for today? Let's see. Who came in late here? Cody, I guess. All right, yeah, I was trying to get the right roster. Samuel, right? Georgia, I didn't count you absent. I knew you were getting a picture made for, was it a tennis team or all the athletes?
Oh, I'm on cross country team now.
Are you not in tennis this year?
No, both.
You're on both? And okay, and taking 24 credits and working as a work study, and he even has time to have a girlfriend. Okay. She's going to have to go down and do some cross country with him so he can see her. Is she on the? Is your girlfriend on the female tennis team?
Yes.
Well, you get to travel with her. Okay, you can do what you have to do. You can organize your time. And remember that word opportunity cost, that term, opportunity cost, 2 words. What you give up to do something else. So George's opportunity cost for playing sports is a lot of free time, more TV time, more movie time, more dating time. So it's always opportunity cost. But anyway, grades. Hope Giorgio don't let his grades go down. I don't think he will. Anyhow, okay, Kayla, what problems were due today?
12, 13, 4A10, 4A11.
Okay, 512 and 513.
412.
I mean 4, gosh. And then 4 what?
4A10, 4A11.
All right, that A is the appendix. And let's look at number 12 first. On page 229, number 12. This company distributes 2 premium golf balls, Flight Dynamics and Sure Shot. Monthly sales and the contribution margin ratio for the 2 products are. Now, a contribution margin ratio, I think they're throwing this in on you a little early there. Okay. But if you remember, I don't even think we've had that in principles. We're not going to get a real good story on contribution margin, and we're going to start that today in chapter 5. Okay. All right. Anyway, you have sales and contribution margin ratio, 80%. Okay, I'm not able to write on this thing, but let me see if I can bring this up. All right, now this one, see, has draw on it, and on draw here, I can change my pen, black or pink or yellow or whatever, but it works on this one. But anyway, we take sales minus variable cost gives us contribution margin, minus fixed cost gives us net income. So your contribution margin is sales minus variable cost. Now, contribution margin goes to pay your fixed costs and give you a net income. So if sales were $1,000 and contribution margin was 200, variable cost is 200, then 800 would be your contribution margin. Now I'm just glancing at that problem as I all right, for Flight Dynamics, and I did this, sales is always 100% or 1, and variable cost would be 20%.
You're in the right chapter, sir. And we're not sure where you're at. Find it.
Well, no wonder it mentioned contribution margin. I'm in chapter 5. That's why. Well, I'm glad you finally stopped me. But anyway, this is what you're going to learn at the end of class today, which is contribution margin. I wonder why they were putting it in chapter 4, but I didn't take time to look. Oh, well. That's my mistake for the year, as I only make one. Okay. It does help to have the right chapter. Okay, page 177, I guess, or 176, and information is on page 175. Okay, superior products uses the weighted average, and so on, cost and beginning working process, and of course, they tell you how many units were in process, and then what they have added, the ending working process they give you, and so on. Now, it says compute the equivalent units for materials, labor, and overhead. Now, we know labor and overhead is usually the same, but we don't know about that. So, anyway, if you have any questions on these, please mention them and we will work them if we need to. At least I have the right chapter up here on solutions. I haven't got these put on Moodle yet either. All right, did you have any trouble calculating the equivalent units for materials, labor, or overhead? All right, now we had to do these in a little bit backward way. Units in ending inventory, percent complete was 80, and equivalent units there was 2,400. Units in ending inventory, 60%, 1,800. And usually labor and overhead are the same, their conversion cost. Now, all you were doing was computing equivalent units in ending inventory, not total equivalent units. Now, equivalent units in ending inventory, cost per equivalent unit. Now, that was given to you, wasn't it? Cost per equivalent unit. See, they're working backwards here. You have to find equivalent units to get cost per equivalent unit, but they gave you that, right? And you just do a little bit of production summary. And you're finding 30,000, 5,700 some, and 11,000 some. Now, units completed and transferred out. All right, 25,000 times your cost per equivalent unit. They're just giving you bits and pieces of a problem. Now, again, this won't write, but if you added 2,400, if you took this 2,400 and added that to 25,000, that'd be your equivalent units, wouldn't it? So add 2,400 to 25,000, you get what? All right, keep that number in mind in case we can use it later. All right, now for conversion cost, 1,800 added to 25 would be what?
26,800.
All right. Now, units completed and transferred out, the cost is 312,500, 80, and 160, or this amount. Okay. Now, to conciliate your cost, they gave you the total cost we had. 599,780 to be accounted for, and here you are accounting for it, and in the working process, and cost transferred out. So you're doing everything a production summary has, except starting out finding unit cost, which was given to you. Okay. All right. Somebody take this 27, take 27,400 and multiply it by 1,250. Take 27,400 and multiply it by 1,250. What would that give you?
34,250,000.
Oh, too many million. No, not millions.
342,000.
Okay.
300 and what?
42,000.
All right. Now that's the number you had to divide the equivalent units in to get 1250. I was just working backwards with you. Now we can do the same thing here and here, and we should be adding up to get this cost. But we won't do that because we'll have another complete summary here in a minute. All right. Now this problem, how many of you worked this problem? All right. Did you do it in 20 minutes or less? No? All right. Now number 13 says it's 60 minutes. Did it take you an hour to do number 13? If you ain't good at it, it shouldn't take you an hour. This one says 20 minutes. This next one shouldn't take over 25, because you're doing about the same thing. Okay. Equivalent units. Units transferred to the next department. Let's see. And inventory, 1 unit times 100% complete for materials. So you got 51 equivalent units for materials. Now, for conversion costs, now that was mixing. Okay. For materials, units transferred is 50. Materials is 1 unit 80% complete. Conversion cost is 1 unit 70% complete. I don't like little numbers like that you could get lost with them or could confuse you. But this is equivalent units, and that's what's important. Okay. Cost per equivalent unit, you take your beginning, add your new, and divide by 51 to get 1,630. And over here you got 120, and over here 850. All right. Part 1, and make a check mark. And then part 2, cost of ending work in process, 1 equivalent unit times 1630, 0.8 units times 120, and 0.7 units. Units complete and transferred out, 50 times 1630, and then of course 50 times 120. Now here's your total cost here. You add that, you get 132,321. That's how you account for your cost. No, this one shouldn't take much more than 20 minutes either. Okay. All right. That is 12 and 13. All right, we're going to look at problem 15. Problem 15, page 177. All right. Take a couple of minutes and do part 1 and 2. Let's work on this one together. We need to finish one of these together in class. Take a couple of minutes and work on part 1 and 2.
Which problem?
We're on page 177. We're on problem 415. And we're going to do parts 1 and 2. Okay, what did you get for materials equivalent units? Did anybody get 200,000? All right, for conversion cost, did you get 170? Remember, the weighted average is transferred out, 160. And then ending inventory, 100% complete, 40. That's 200. That's 200 you had to account for. And then the conversion cost, 160 transferred out, 25% of 40 is 10. Now, are we clear on the 200 and the 170? All right, how do I get cost per unit? I take my total cost of 25.2 plus 334.8 and divide that by 200. How much did you get, Kayla? Cost per equivalent unit. How much? Well, 200. Yeah, that's less than 2. I wonder how they rounded that off or how many places they took it out to. So all she is doing here is taking those two costs that they give you, 25,000, this after you get your equivalent units, and she's taken 334.8. This is all the costs for your materials, and she got 359.8, and she divided that by 200, and you got 1.6666. All right, this is 1.80. That's better. We don't have to worry about rounding, do we? Okay. Now we'll make sure we're on the right track. All right, there's your 200 and your 170. Then there's your 180. It's easy, folks, if you do enough of it. Okay? So part 1, part 2. But now you got to get part 1 right or everything else is wrong, isn't it? Then you got to get part 2 right or everything else is wrong if you don't get the dollar amount per unit. I won't even ask you what you did wrong, Caleb, because somebody would take it and remember it as the right way to do it. Okay? We won't go there. Okay, then take a minute and do part 3. If you get part 3 done, take a minute and do 4. Okay, for part 3, quite easy. You took 40,000, multiplied it by what? For part 3, you took 40,000, multiplied by what? Kayla, what'd you multiply 40,000 by? What? Well, now we're doing part 3 is what now? Total cost? Cost of ending work in process. This is ending work in process, isn't it? 40,000? Did you have to? Okay, what is your answer to 3? Anybody got a different answer? Number 3. Georgie? Come on, how would you do number 3?
I wasn't able.
He's lost. All right. Part 3, calculate the blended department's cost of ending work in process inventory for materials, conversion, and the total. It's a dollar amount, Kayla. You can't just say 40,000, that's equivalent units. You got to multiply that by $1.80. Then you got to multiply 10,000 times $1.55. All right, and here's what you get. You multiply 40,000 times $1.80 and 10,000 times $1.25, and total cost is $87.5 for the month. That's a 30-second problem. Okay. Okay. Now, part 4. Let's do better on part 4. Calculate the blended department's cost of items transferred out. Now, you know how much is transferred out. Calculate the cost of items transferred out. All right, Cody, I take $1.80 times what?
80 times the 60 cents.
But times 160. And Mark, I took $1.55 times what? 160. All right, when I do that, I've got total cost of 536. See why it's a 30-second problem? Okay. All right, now we have to reconcile, so. All right. If you have a problem on a test like this, can you do it? All right, now for your homework today, which we're not going over, you have problem 4A10 and 4A11. You're doing the same thing as we did here today, but you're using weighting, you're using FIFO for inventory instead of weighted average. We'll get those Tuesday, okay? So if you don't have those 2 today, you got a second chance to have them for Tuesday. The whole production report. All right, we're going to leave this chapter temporary and go to chapter 5, and please read chapter 5 for Tuesday and try to work the first 4 or 5 exercises in chapter 5. All right, I should have PowerPoint if I can find it for chapter 5. No, that's chapter 4 stuff, so. Thank goodness for jump drives. Oh boy, PowerPoint for this thing also is only 1 chapter at a time. In my other course, I can download the whole file for PowerPoint. Okay, I don't have it handy, so I'm not going to take time to find it. chapter 5, I'll use notebook. I probably got that PowerPoint somewhere. It may be in Moodle, but it doesn't matter. I just don't have time to fool with finding it. Okay, chapter 5 is on contribution margin. Now, and also we're going to calculate break even. Now, in the past, you have done an income statement like this. You have taken net sales, that's sales minus any returns, allowances, or discount, and you have subtracted cost of goods sold, and you came up with gross profit or gross margin. You subtracted administrative and selling expense, lump them together, called operating expense, and you got net income. Now we're changing that to the contribution margin approach. We will take net sales minus variable cost, gives you contribution margin, minus fixed cost, gives you net income. You got to get the same answer. No matter what approach you use, you've got to have the same answer. But we're going to use this approach. Now, as I started to tell you earlier, when I was on the wrong problem, we can let net sales equal 100%, and if variable costs were 60%, that leaves you 40% to pay for your fixed cost and net profit. Well, a fixed cost in this case was 10%, then net profit would be 30%. But those won't always be the same. They change with different countries. All right. If you have a textbook, we'll just keep it on Notepad. If you have a textbook, we'll be on page 198 and 199. Page 198 gives you a contribution margin income statement. All right. You had $40,000 to pay for your fixed expenses and for your net operating income. Now, what if your contribution margin was only $35,000? Then you can pay for your fixed expenses and have zero net income or break even. So you've got the same thing here on both pages, illustrated 4 or 5 times. All right. But in your book, we're going to flip over to, and you don't have to do any graph work. If you see any graphs in this chapter or on problems, you do not have to do them. I don't expect you to buy graph paper and learn how to plot lines. All right. But we're going, I guess, in your book, I'm trying to find it. We're going over to page 210. 210. All right, on page 210, you see a formula for break even. All right, it is your fixed expenses, break even is equal to your fixed cost over 1 minus your variable cost. Now, that's pretty much what that formula is giving you in the middle of page 210 in the red. Now, they take it this way. Break even is fixed cost over contribution margin. Well, when you take 1 minus your variable cost, that is contribution margin. Now, there can be a sales price minus variable cost is your contribution margin. So let's practice one of these break evens. Let's say your fixed cost is equal to 50,000. Let's say your sales price is equal to $5, and the units you sold was, let's say, 50,000. But let's say your variable cost per unit is $3. Now, can you find break even? First off, take your 50,000 times 5, and then your 50,000 times 3. All right, keep those numbers in mind. 50,000 times 5 is 250. 50,000 times 3 is 150. All right. We can do that on a unit basis or on a total basis. I said fixed cost was 50,000. I want break even. Now I can do it this way. I can take the sales price minus the variable cost. All right, so my break even would be 50,000 divided by 2. So how much is that? Now that is 25,000. That is units. That's not dollars. We'll do dollars later, but this is in units. This is break even, and I'm going to put a little U there to show it's in units. All right, so 25,000 units. Well, let's prove that. Let's prove that it's correct. Sales is 25,000 units times $5. How much is that? Sales.
125,000.
All right. Now the variable cost is $3. How much is that? 3 times 25,000.
35,000.
All right, now your contribution margin is going to be 50,000. Now what was your fixed cost? 50,000. Break even, net income at break even is 0. Does that make sense? Break even is 0. So let's practice another one. Fixed cost, I'm gonna make this one simple. Fixed cost is 30,000 a month or a year, whatever. I'm just gonna give you this one. Selling price is $10. And your cost of merchandise is, let's say, $7. Now, use that formula I gave you and find me break even in units. How many units do you have to sell? Is it 1,000? What is it? 1,000? All right, if you use that formula, it's 30,000 divided by 3. 10 minus 7 is 3. And that's how many? Now, break even. Let's say you were a store selling a single product. A single product closest to this information might be a CD. Cost of goods sold or variable cost, you pay $7 for each CD. You're doing maybe a volume. Let's say this 1,000 is a month. All right. So your break even would be 1,000. Now, if we put that break even into the contribution margin statement, sales is equal to 1,000 times $10 is how much?
100,000.
Wait, something's wrong there, isn't it?
Yeah, my man.
No, it's not either. 1,000 times 10, that'd only be 10,000, wouldn't it? Wait a minute. When we divided 3 into 30,000, we should have got 10,000. 10,000 break even. Now, 10,000 times 10 is how much?
30,000.
All right, variable cost, 10,000 times 7 is how much?
70,000.
All right, now your contribution margin is how much?
So 10,000,
30.
30,
All right, and your fixed cost is how much?
30,000.
Your net income then is what? 0. That's always a way to check it, okay? Now you can go further with this. If you break even, 3 into 30,000 will give you 10,000 every time, okay? If you do it right. Now, what if this was a CD store? And they're open 25 days a month. You got to sell 10,000 CDs. Divide that by 25 days a month. How many CDs do you have to sell a day? How many CDs a day?
400.
You'd have to sell 400 CDs a day to break even. All right, let's say you work a 10-hour day. How many CDs do you have to sell an hour? 40. If you got 2 employees, they each have to sell an average of 20 an hour. So you can use break even for even multiple products. But here we're looking at it as one product, the store selling one thing. It could be air conditioner units, or it could be anything where they sell one item. All right. Now that is pretty much, when you read your book, that's page 210. We can turn that around. Now we know that our break even in dollar sales is 100,000. We can find dollars, but we can find dollars before that. All right. If this is 100%, this is 70%, and CM is 30%. 100% minus 70% is 30%. All right. Now we're going to try this another way. We found 10,000 units. But now we're trying to find dollar sales. All right. Now that is break even. I'm going to put a dollar sign here. Is equal to fixed cost over 1 minus the variable cost percents. All right. So break even is equal to fixed cost 100% minus 70% is decimal 30. Now you divide 30,000 by decimal 30. What do you get? 30,000 by decimal 30. What do you get? How much? What? 30,000 by decimal 30. What do you get?
0.044.
Lord, no.
No? Oh, sorry.
Decimal 30 into 30,000. All right. And that is sales in dollars, break even. So that's the 2 pages that we're looking at. So let's try this one real quick. And you can check that out also by putting it in the statement. All right. Let's say your fixed cost is equal to 20,000. All right. Your sales price, you only need the same thing, is $25. And your variable cost is $20. Can you change those to percents? Can you change those to percents? All right, we'd take 20,000. We know that's 5. We know the sales price is 100%. Now, if the sales price is 100%, what's variable cost as a percent? If sales price is 100%, divide 20 by 25. Divide 20 by 25, what do you get? You get 80%. Now, over here we are, 1 minus 80% now. So now what is break even? Decimal 20 divided into 20,000 is how much? Decimal 20 divided into 20,000 should be 200. All right, we will work on that, folks. You're not experts today. So read this chapter and do the first 3 or 4 exercises, okay? Now, our next test will probably cover these 2 chapters, and I'll tell you pretty much what's going to be on the test, so hopefully everybody can do better on the next test. All right, let's call it a day, and see you Tuesday.